Hello, this is Saurav and this is our channel Tex Accountants. Here we post a lot of videos related to small business owners and accounting concepts. So today I'm going to cover a very important topic, and I know tough times out there. We are going through recession and there's not enough business out there. Interest rates have been high recently, which is coming down now. But a lot of businesses I'm talking to right now, they're struggling and financially, and cash flow is a real problem for them. So today I thought of covering a video mainly on how to manage cash flow in tough times. And we can talk about practical tips here so that you can improve your cash flow. Cash flow, often people get confused. What is this? What is this? What is this? So in simple terms, cash flow is a lifeblood. It's a lifeline. It's a blood of your business. Without that, business cannot operate. And do you know 82% of businesses fail? 82%, that's a very high number. 82% of businesses fail due to poor cash flow management. So you can be a very good doctor, engineer, you can be a very good carpenter, roofer, builder, but doing a business is a separate thing. Running a business requires a separate kind of management skills. You can be a very successful business owner and you may know nothing about roofing or tiling, you know what I mean, if it's a construction business. However, you just need to know how to run a business. So one of the key criteria to run a successful business is cash flow management. Remember one thing, cash flow is very important for any business, and especially it's critical right now when there is an economic downturn and people do not have as much as businesses they were having before. So common challenges, what I have learned over the last 20 years or so, late payments, just customers, they're just delaying paying their payments. They got the services or goods, but you haven't got the payment yet. Okay, there could be some seasonal fluctuation. You may have a business where, example, if it's seasonal business where you get a lot of money together, but you don't get the other time. So to the management there, you might have very high overhead cost, or you might be tied up into some sort of fixed lease agreement of your building or premises where you're paying heavy fixed cost for your business. You might be overstocked in terms of inventory. You might have a lot of staff and you may not be producing enough income compared to the staff you have. So we need to find out what exactly is the problem and what's causing your problem. So overhead or fixed fee, look at those ones, and you're not forecasting good. Step one, what you do, just do a simple maths, very basic. Just track your income and expense weekly. Sit down on a piece of paper, forget about the good templates and blah blah blah, whatever they're trying to sell you, the softwares and things like that. Just look at the basic thing. Track your income and expense weekly. All you do, pull up the bank statements every week of your bank account and see what's happening. Just do a maths, like simple paper and pen. Okay, if you're good enough, you can use the spreadsheets, Xero, MYOB, QuickBooks, any accounting software you can use. But the idea is do the tracking weekly. Understand your break-even point if you can, but don't hang up too much onto break-even point. Break-even point, what we mean with that is basically if you have when you got your expenses, right? You got that sorted. You got your income sorted. Then what you do, you look at this is my expenses are 5,000. So your break-even point is you need an income of 5,000. So they both have to marry, right? So this is my break-even point because these are my expenses. I must make this much of income. Two things. I don't think I can make 5,000. I can only make 4,000 income because this is my income. All you come down and trim these expenses down. Bring these expenses to 4,000. Right? You got to match them. If you do not match them, you will have more expenses and less income. You want more income and less expenses. Remember one thing. That side has to be more, that has to be. It's very simple, very simple maths. Okay. Okay. Step 2, improve. Okay, we found the problems. We know that there is a problem in your business. We know where is the revenue leakage. We have found those issues, whether it's high staff cost, high wage cost, low margins, or whatever you're selling. We need to do the understanding first. Once you found the problem, then we're going to fix the problem. And assuming you have fixed those problems, at the same time, invoice promptly and clearly. What happens is, I often see people have done the work, but the invoicing hasn't been done regularly. You're stocking up a week worth of invoices, and then every Monday, all those invoices are going through. No, stop doing that. Invoices must leave your office on the same day, as quickly as possible, right? Incentivize them. There must be some payment options there. If someone can pay by credit card or something, it's okay, you get that hit of 2% or whatever bank charges, but at least you get paid promptly in your bank account. Follow up on overdue payments. If someone hasn't paid you, make sure you follow up and consider a deposit or milestone billing. Now this is an important point. I want to talk to you about this. Now let's say you're doing some work and it's a large project, right? So you can have a breakup points of that project. So you might say 25% I'll get on stage 1, 25% stage 2, 25% stage 3, and on. So break up those big things. So do not wait for it to finish. That's the whole point. Now control outflows. Now we have done improve your inflows. Now what's your outflows? Of course, it's a simple thing, but remember one thing, the simple things are very hard to put into practice. The simple thing is delay. If someone is trying to sell you a new car and you don't need it, you don't need it. Someone is trying to sell you new machinery, you don't need it. Just delay. Okay, don't get trapped into it, get that depreciation expense, get that VAT or GST back. The sales people will use all those techniques to sell you something, but you have to see what's important to you. So if you think it's non-essential spending, do not do it. Negotiate with your suppliers. See who, do some shopping around, see who can give you a cheaper rate, and then get that thing. Lease or buy. Look, there could be some arguments, lease is better or buying is better, but do the numbers and see what is better. Sometimes buying works out to be much better than leasing. For example, we had this FPOS terminal there and we were paying $100 a month for that product. For that, leasing was better as the technology itself changed within few years. And if you buy that machine outset for $2,000, it's not worth it, because after 2 years it's worth nothing. So we were leasing it. But at the same time, the office we wanted to have, instead of renting it, we bought that office from the start. That way it was costing us more, but in long run that's much better for us. So do those things and do the analysis and see cash wise what works out to be better for you. Review all the expenses, subscription, some things you might not need and something you can get without it. I just met a client the other day. He was using inventory management and job management software, paying $600 a month for that specific thing. He was really struggling with the cash flow, but paying someone $600 a month just for the software, it doesn't make any sense to me. I asked him, stop it immediately, which he did, but he took 6 months to do it. Look, you got to action promptly. If you found a problem, we want to fix the problem straight away. We don't want to delay those things. Don't procrastinate. Get it done right now. Now the inventories, you overstocking the items. Look, it may happen, may not happen, but I have seen you got some unwanted items sitting there, taking up space in your storage. It's better you get rid of them, whether you have to discount it or dispose it, whatever. Get rid of it, make some space. know what your items are, what fast moving items are, store those items as opposed to old items, work on that. Again, slow moving stock, you don't need those things and stuff like that. Leasing instead of purchasing, it's a very important point I already mentioned before, the leasing or buying something. I might need a separate video on that, but rule of thumb is do the numbers, see what's better for you. Some things might be better to buy on day one, you don't want to pay regular payments, but some things you might be better to pay regularly. Give an example. If you have life insurance, it's better you pay monthly or weekly, because they don't offer you any discount if you pay the whole year worth of together, like health insurance and stuff. But some insurance, business insurance, and I guess some health insurances as well, if you pay the whole year together, you get 10% discounting done. So do those numbers, see what's better for you. If you're making the payment up front, it's better, just pay that. Other day I saw the invoices from rates for one of my client. The rates, they were paying the property rates. The property rates council were offering them 3% prompt payment discount if they pay the whole year worth of paid together. And if you got that contingency plan built up and the forecast, how much is expenses coming up, pay that and get the 3% discount, so that you don't have to worry about tweaking that in your cash flow planning. You don't have to put that thing, every week I pay, every month I pay. So just save some lines, keep it simple, pay yearly. This is when you get into a problem. Can you access some short-term funding? Can you get injunction of money coming into the business from somewhere, whether it's from family, friends, someone can top up the money, get it in. Rule of thumb is anything 8% of interest, 8%, remember this number, anything over 8% of the interest, you don't want those loans, So you don't want these sort of loans hanging around there. And any loans are backed up by an asset. These are good loans. You can keep those loans. Example, you bought some property which is also giving you rental income, but the interest rate is 3 to 4%. So those loans are okay. But anything over 8%, look at that. But when you're going through overdraft or business line of credit, look what sort of interest rates you're getting from there. Any government grants, like sometime research and development tax credits are available, which people don't use it. Sometime loss carry forward scheme or loss carry on schemes are there, the government offer to businesses to support. Sometimes they offer, if you hire apprentice in certain category, in certain industry, we will offer you some discounting or some lower rate, or there are a lot of benefits and subsidies out there for small businesses. If they are available in your country, ask and go and get it. You don't want to be the person who don't even know that this is available, and down the line that, this was available, I should have done it. So do not do those sort of small mistakes. Be informed, talk to people, join networking groups, see what other businesses are doing. If you are a carpenter and other carpenter are doing exactly the same thing and they are more profitable than you and they are not in problem, but you are, think there must be something wrong. Talk to those carpenters, meet with them, see what they are doing, what you are not doing. And if you can just simply copy that, do not try to recreate the wheel. If you just simply copy what they are doing and just carry on doing the same thing, they will be fine. You will run a very successful business and a happy life, believe me. Now the next things you must be wondering how to track my tools. What tools should I use to track my cash flow? I already got a template video. You can watch my other video where I just showed you the template, how cash flow template work, which you can make online on Excel yourself. You can Google it and copy the templates. Microsoft Excel offer it. But the rule of idea and simple exercise is very simple. Just go back to the basic, use pen and paper and do the weekly exercise until you get it right. When you got it right, any templates will help you. You can use accounting software templates, Excel based templates. Those templates will be useful to you. But right now, go back to basics and do that. So the key takeaways today, what I have discussed, cash flow. So it must be actively managed. You don't want to touch it just once a month. every Monday, every Tuesday, open your thing and just do the cash flow planning. See, you remember one thing, management accounting principle. If you can measure it, you can achieve it. For example, if you want your sales to increase by 10%, every week you monitor it, how much it's increasing by. And then you can make strategies around it to increase that. But if you don't measure it, you don't even know where you are, how are you going to achieve it? So every Monday, Tuesday, pick up a day and just do nothing, 2 hours, just do the cash flow planning. What have I done in this week? What I'm going to do the next week? Which clients have not paid me? Follow up, which invoices have not been sent? Do that. What expenses I'm paying that I should not be paying? What revenue channels I should be targeting that I'm not targeting? Do all those exercises every week, 2 hours. And small changes. It could be as small as $10. Example, one of the bank was charging monthly bank fee of $10, but the other bank is not charging. They're giving free. See, you can imagine that $10 saved is $10 saved. So see small changes while you implement, you will see the progress happening in your cash flow, and cash flow is building up. Once it's get built up, then we want the contingency planning, and then they say that 3 to 6 months of contingency you should have, 3 to 6 months. So plan, this is my monthly expenses, times that by minimum 3, maximum 9. Okay, ideally around 6 months. 10,000 if your expense, times that by 60,000, have 60,000 saved up in your bank account. This is a very important point. Seek advice, do not delay. If you think you can't do it yourself, go and talk to someone. Someone out there will be able to help you. Could be your other people in your industry, they might be offered to help you. In the networking groups, you can join the local chamber of commerce, business chamber of commerce, you can join. And the starting point would be your accountant, whoever your accountant is. If they're not able to advise you and help you in those things, try to find where you as a character, you as a skill, and that person as a skill. There has to be a match, there has to be exchange of energies between you. If you can find that person, then just hold on to that and just use those services and get better in your business. And look, if you need our help, we are here to help you, whichever part of the world you could be, or you could be local in New Zealand. If you are, this is our website, ibis.co.nz. You can book a meeting, or this is our email. You can send us an email, info@ibbz.co.nz, or this is our phone number, 092728050. Hey, you can like and subscribe my channel, and happy to share my knowledge and more videos like that with you. Thank you.